During order planning, you enter costs, activities, and business processes that you expect to incur during the life cycle of an order. You can also compare planned and actual costs and carry out differentiated variance analysis. You administrate the approved cost framework for an order or an order group by using budget management. The budget is the approved cost structure for an order and differs from the cost plan because it is binding. The budget is the device by which management approves the expected costs for an order over a given time frame. You can enter the order budget manually or copy budget information from any plan version.
Internal order planning provides the following levels of cost planning. Overall planning is the simplest method of planning costs for orders. You can estimate overall and annual values for an order separately from cost element planning. When detailed information is available for an internal order, you can use primary and secondary cost and revenue planning. This level covers the planning of primary costs, activity inputs, and revenues in manual planning. In automatic planning, you can charge the order with overhead costs, distribution costs, periodic reposting costs, assessment costs, indirect activity allocation costs, process costs, and settlement costs. If the order is integrated into planning, you can carry out a plan credit by using periodic repostings or settlement. If you have access to detailed information on sources of supply, quantities, and pricing, you can perform unit costing. With unit costing, you can plan one level below the cost element level.
For overall planning, you need to create a planning profile and not a planner profile and assign it to the order type. You can use delivered standard SAP profiles as well. Within the profile, you can specify the time horizon and whether you want to plan on a yearly or overall basis. Only those cost centers, cost elements, activity types, and statistical key figures that are organized into groups and stored in the planning profile can be taken into account during planning. For unit costing, you need to define and assign a costing variant or COPC. For planning at this level, you need the costing variant, that is the interface to the bill of materials, material master data, and routing or quantity structure.
Overall planning is the most basic form of order planning. Here, you create a plan by estimating the costs that will be incurred for an order. You can plan either overall values or values for individual years. During the overall planning, you need to create a planning profile and store it in the order type. You can call up the primary cost planning, unit costing, revenue planning, and activity input planning functions straight from the overall planning screen. In addition to the overall values column, the system also displays the planned total, the unit costing values, and the cost element plan. The total planned value is the sum of all the cost planning forms, namely overall, cost and revenue element, unit costing, and activity input planning that are used. Alternative versions allow you to store planning data for internal orders. Or, if you are using transfer prices, they allow you to store parallel valuations. Use the following indicators for integrated planning when configuring a version. Integrated planning. This indicator governs whether planning data is passed on to profit center accounting and the special purpose ledger. The integrated planning indicator also ensures that each planning change is documented with a plan line item. Integrated planning with cost centers and all business processes. This indicator must be active in the plan version to ensure that internal order planning is included in cost center accounting or CCA and activity-based accounting. To use integrated planning for individual orders, you also need to set the relevant indicator in the order master. You can create a default setting for integrated planning in the order type configuration.
You can use integrated planning for internal orders only if the internal order already exists when the cost centers are planned. You use integrated planning for long-term orders. The following factors of plan integrated orders impact planning. When planning activity inputs for an integrated planning order, the planned activity is updated to the cost center providing the activity. Order costs are debited from the receiver during planned settlement of the order. Overhead calculations debit the internal order and credit a cost center. When using assessment and distribution, the planned costs of a sender cost center are allocated based on predefined assessment and distribution keys. Periodic reposting to cost centers is supported. You can copy both actual and planned values from internal orders into a planned version. You assign the actual business transactions to the corresponding manually planned business transactions.
The system recognizes the following budget types. Original budget. The original budget is the budget that is originally allocated. Budget update. Budget updates for orders include supplements and returns and are used when unforeseen events and additional requirements force a correction to the original budget. Current budget. The current budget includes the original budget and all budget updates. In addition to the budget update functions, you can also make changes to the original budget. You can freeze the original budget by using status management. To freeze the original budget, you must create a user status that prohibits the budgeting business transaction but allows budget supplements and returns. When you create or update your budget, the system documents the transaction in a line item. You can then display the budget line items. You can also enter text for budget line items that provides additional information for budgeting. To create a budget for an order, you must define a budget profile and assign it to the order type. The budget profile defines the parameters for budgeting. In customizing, you must define a number range for your budget documents. In the profile, you can specify the status of availability control in one of the following ways. Availability control cannot be activated. Availability control is activated manually by using a function in the component menu. Availability control is activated automatically during budgeting. You can check funds availability using either the annual or overall budgeted value.
Certain business transactions result in actual costs and commitments being posted to the order. Commitments represent obligations that will lead to actual costs through subsequent business events. A purchase order or PO, for example, may result in a commitment in management accounting, which is then reduced by the subsequent goods and invoice receipts. Actual costs and commitments are funds allocated to an order, and they can be checked against the budget by using availability control. In customizing, you define the following attributes of availability control for your order types. Is availability control active? For which transactions will availability control apply? What are the tolerance limits? What action will be initiated when tolerance limits are exceeded? Are certain types of costs exempted from availability control?
You use the tolerances to define how the system should respond to a given degree of budget overrun. In our example, if the budget is exceeded by 5%, that is, 105%, the system generates a warning and a message is sent automatically to the person responsible for the budget. If the budget is exceeded by 15%, that is 115%, an error message is displayed. The document that caused the budget to be exceeded can no longer be posted. You can define tolerance levels for budgets in the budget profile according to business transaction groups. Different tolerance levels can be set for different business transaction types. If you select the action Warning and Mail, you must specify a budget manager in customizing. If no budget manager is entered, the system generates an error message. A budget manager may be established for each order type and object class. If more than one budget manager is defined for an order type and class, a mail will be sent to each individual. For example, in the illustration, the user Peter Miller will receive a mail for any deviations that occur in order type 0100, object class OCOST. You can transfer unused funds to the next fiscal year using the budget carry forward function. The SAP system will carry forward the difference between the budget and the actual amounts for the year specified as unused budget amount. You cannot carry forward budgets for orders that have system status complete or that are flagged for deletion, nor can you carry forward negative budget amounts. You can execute the carry forward run more than once for a fiscal year. Each execution of the program carries forward budget not previously processed. You can also return funds to the old fiscal year up to the amount of budget actually carried forward. To execute the carry forward program, enter the fiscal year of the budget you want to carry forward and a selection variant that specifies which orders are to be included. You must maintain the selection variant in customizing. Commitments are not considered in the calculation of the unused funds. You carry forward your commitments before carrying forward the budget.
If you choose budgeting in the controlling area currency, you can enter all budget items in the controlling area currency. If you choose budgeting in the object currency, you can enter the budget in this currency for each object. The object currency is stored in the master record of the object. If you choose budgeting in a freely definable currency, you can choose the currency for each budgeting transaction. All budget items are converted and saved automatically in the controlling area currency and the object currency. You must specify in the budget profile of the order type or the project profile the currency in which the budget items for the order or the project are to be entered. Availability control function is executed in the object currency. This eliminates exchange rate fluctuations.